Hey, everybody, welcome to another episode of A Millennial's Guide to Real Estate Investing. Today, I have Agostino. He's a commercial real estate investor in Cleveland, Ohio. And I just went on his show last week. So thanks so much for coming on my show this week.
Yeah, man. Greatly appreciate it. Greatly appreciate it.
Absolutely. So give people a little bit of a background about who you are, what you do, and the kinds of real estate investments that you do.
Yeah. Well, my whole journey starts with really technology. My background was IT. Really, since I was a kid, I wanted to work in IT, right? So I learned how to code when I was like 10 years old. I was one of those kids, right?
Yeah.
And I wanted to be an entrepreneur. I wanted my own software company. I wanted to work in technology. I thought it was a marvel, but my parents were always like, entrepreneurship is not for you. You need to go work for someone, and that was ingrained from the very beginning. This is a plan already defined for you. It's the
Yeah.
same plan that we were on. It's the same plan that when we came to Canada, meaning my parents, this is the plan that everybody follows. You need to follow the same plan, right? So you ignore entrepreneurship and do that. So I ignored my entrepreneurial tendencies and decided to go into corporate America. And I didn't make a really good employee, man. I just did not make a good employee. It's after working at companies, I had some success. I made it to the C level numerous times, working in different companies. And only when suddenly there's a shift, there's a change, as there is at many of these companies. New CEO comes in. They decide they're going to change things around, and next thing you know, you're getting the box. Here's the
Yeah.
box. Pack up your shit, get out. Kind of like that. After a bunch of times of that happening, I said to myself, how much longer will I give my time, the limited amount of time that we have on this planet? I'm going to hand it off to some other people in exchange for money, right? How
Yep.
much longer am I going to do this? And like, am I going to be like 55, 60 years old and have this happen again? And then what? How many more times can I possibly go through this, right?
Yeah.
After getting fired over and over and over again. And I just decided, I was probably in my mid 40s actually. And I said, you know what? I'm not doing this anymore. I'm going to quit this long time IT career at the C level. You're talking like 6-figure career,
Yeah.
like very well recognized in the industries that I was in. Quit cold turkey and go straight into real estate. And that's exactly what I did. I made a decision. Now, and I think, to your point, it's kind of like, and we talked about this in the green room, is that that decision point was made, and it's like you kind of like burn the ships, and this is all I'm going to do. It's exactly what I did, right?
Wow.
So nowadays, I'm getting my hands on big multifamily deals. Big is typically 100 units or higher is what I'm looking for. We did the Rockefeller last month, the Rockefeller building in downtown Cleveland. That's a redevelopment project. I'm getting into redevelopment now, but I closed a 96 unit last week, and I closed another 200 unit. I think after our call last week, I closed another
Yeah.
200 unit.
That's right.
Closed,
That's right. Yep.
right? So it's 300 units in a week. Trying to get my hands on I would like to get another 500 units at least under contract by the end of the year. So that's going to take a little bit of work to do because the market is really, really tight here in Cleveland
Yeah.
and everywhere for that matter. But, I'll find a way to make it happen somehow, but but that's all I do now, man. I do multifamily, I do redevelopment, and getting into triple net
Got
next.
it.
So those are the three primary focuses, but it all started with multifamily. That's where it all began,
Got
and
it.
I'm going to continue growing that multifamily business.
Got it. And so are you Canadian?
I am Canadian. I'm from Windsor, Ontario, Canada. Yeah, yeah,
Oh, wow. Yeah, I'm wow, Windsor.
yeah.
My grandma lives in London, Ontario.
Hey, yeah, a couple of hours away. Sure,
Yeah,
sure.
yeah, yeah. And then I was born in Toronto. So we came
Okay.
from Toronto. I grew up in the Bay Area, San Francisco Bay Area. So yeah. And my dad's French side, so he's in Quebec, Montreal, and like northern Quebec. And then my mom's side, the English side is in Toronto and stuff like that. That's so
Nice.
funny. Wow, I had no idea. All right, cool. So you were, what made you go cold turkey though in quitting your job and go right into the real estate? You must have had some sort of like been studying or learning or knew that it was a way out. So was it through like just podcasts and books? And what year was this too that you did go cold turkey? Because now it's a different kind of beast, because you do have this podcast or podcasts like this. You do have books, and like people know what the burr strategy is. So like, when did you do that, and what made you, was it like somebody you met that made you kind of make that jump or make that decision?
Yeah, that's a good question. So I would say, let me see, 14, I'm looking at the calendar here. So I'd say about 4 years ago, actually. I think it was about 4 years ago, 4.5 years ago, something like that. Up until that point, right, I was doing like single family homes. So like I've been doing single family for like 15, 16, 17 years,
Oh, wow.
So I've been, but here's the thing. I started off strong, and then for a while I stopped because I was so busy working on the career, right? I was so busy
Yeah.
working on like, keeping the career afloat, and had a whole bunch of other personal stuff that really got in the way of really building a successful business. Part of it is, of course, just like I said before, I got stuck going to do the work for the man, that type
Yeah.
of thing, ignoring my entrepreneurial tendencies. I mean, I started other companies too, by the way, between that time, in those 15 years from when I bought my very first home until I made the decision to really focus just on real estate. I started up, let's see, IT companies, software companies, debt collection companies, asset management companies, call center company. I mean, I started all kinds of stuff, right?
Wow.
So I had a very wide breadth of knowledge when it came to creating companies, right? And how to had an idea about raising money, of course. Because I worked in corporate America, I knew about big dollars and big budgets, and that kind of stuff didn't really scare me at all.
Yeah.
So when I made the decision after getting canned yet again from this one company, I was living in Indianapolis at the time, and I'm like, you know what? I gotta make a change, right? And I think I'm gonna do real estate. It wasn't even solidified. I was like, I think I'm gonna do real estate because it's the only thing that, despite all these problems that I've had in my entire life, over the
Yeah.
last 15 years, that little portfolio that I had was still producing money.
Wow.
Come hell or high water. It wasn't a ton of money because I sold off a lot of stuff over the years, right?
Yeah.
Not
Yeah.
really focusing on it. But it's like I get a little trickle of income. And I'm like, you know what? Despite all the crap and all the shit that I have to deal with in my entire life, this money was still coming in
Yeah. No matter what happened.
no matter what happened, right? So I'm like, you know what? I'm going to do real estate. And then when I made the decision, I went from Indianapolis to Michigan, sold off some stuff there. Went from Michigan to Virginia, sold off some stuff there. But it was at that point when I met this, or not really met, I spoke to a real estate attorney friend of mine,
Yeah.
right, that I met years prior. And I don't know why I was thinking I was going to ask him about real estate or something, like a question about something related to real estate,
Uh-huh.
because he's a real estate attorney. And I remember sitting in my car looking outside, and I saw this little 30-unit apartment building. And I asked him, I said, hey man, like, who owns that? He says, well, what do you mean? Like, I described the building to him, and he says, he says, what do you mean? Who owns it? I go, yeah, who owns it? He goes, what do you mean? People own it. Well, what people? How do they buy it? Oh, syndication. What's syndication? And he explains to me what syndication is, right? The general
Mhm.
partners basically put the deal together, and they raise the money from limited partners. The limited partners put the money in. The general partners put the deal together. They get the money from the lender. They organize everything with property management and operations, and they run the deal and they give a return. Very, very simple. I'm like, I could do that. And that's when I made the decision. You know what? That's what I'm going to do. I did the research on it. Now, back then, you're right. There weren't exactly like a ton of podcasts, even
Yeah.
that long ago, what, 5 years ago? There
Yeah.
weren't
Yeah.
that
Yeah.
many,
Yeah.
you know? And I mean, now it seems there's a magnifying glass on it. I think it's really like guys like Grant Cardone and some of these other big guys out there. I think they're just pumping out training material like, forever, which I don't totally agree with, but a lot of those guys out there pumping out stuff like that.
Yeah.
And back then there wasn't such a thing, so I just got to studying on my own, everything from like Robert Kiyosaki and Sam Zell, like some of the big thinkers, but then also
Yeah.
getting down to the nitty gritty about like, what is NOI? What does that mean? Like in single
Yeah.
family, it's very different. It is in multifamily, right?
Yeah.
But becoming familiar with the terminology, becoming familiar with the how to deal structure, all that stuff, right? But I mean, I was training from morning till night. I mean, I had the headphones on. I had all kinds of audiobooks. I'm listening to book after book after book after book
Wow.
because I had no other choice at that point, right?
Yeah.
Um, I did it like it was my job, and it was. I wasn't working. I mean, I was right now at that point. I was like, I was just like, okay, I'm selling off all my properties. I'm gonna have some cash on me.
Yeah.
This is all I got. So I'm gonna train like
Got to
my
make it
life
work.
depended on it, right? And I
Yeah.
think,
Yeah.
and we talked about this in the green room, is that when your life depends on it, then you're gonna see some action happening.
Yeah. Yeah.
That's the key, right?
Yeah. You put your back against the wall. That's the thing. There's no other way. It was like me too. Like right out of college, it was like I had done one deal in college, and then I graduated, and I was like, all right, like this is, I got 6 months, or else I'm gonna have to move in with my parents. So, and I don't want to do that. So, I damn well better put in the work to make it happen. Yeah,
Yeah,
exactly.
yeah, that's right.
Wow. And so the first, so you quit your job cold turkey, and then I know, did you do stuff in other markets then, or did you, is that when you went to, because I know now you're doing Cleveland, Akron, but did you then move to Cleveland, Akron, or did you start doing stuff in other markets and then move to Cleveland, Akron because of the market there?
Yeah, early on, I did. I had stuff in Michigan because I used
Yeah.
to live in Michigan, right? And then when I had stuff in Virginia because I actually lived in Virginia for some time as well. So when I was in Virginia and I made the decision to do real estate,
Yeah.
I did the research, right? I researched where am I going to go next, and I discovered that Cleveland and the Cleveland Akron area was still, recovering, still in recovery mode back
Yep.
then, right? I don't know that it is now. There's still a lot of stuff going on here, but back then, I mean, it was way, way, way behind, like
Yeah.
Oklahoma City was, I think, at one point. Now I
Yeah.
think
Yeah.
it's
Yeah.
caught up, right?
Yeah.
Everybody's going to Oklahoma City now.
Yeah.
Cleveland was the same way back then. So I literally had my girlfriend at the time. We packed up everything and moved. Packed it up in the Hummer, drove. That's it,
Wow.
and found the place. And I took on a short-term consulting role while I got to work, really studying the market, like boots on the ground, really
Yeah.
getting
Yeah.
to
Yeah.
know the area, right? And creating the relationships. I think that's the key that many people get wrong, is that it all comes down to building those relationships with the brokers, with the property managers, with the vendors, to
Yeah.
make you look like you know what you're talking about, right? And at that point, I already studied and trained like crazy, and I at least sounded credible because I sounded like I knew what I was talking about. I mean, I practiced
Yeah.
a
Yeah.
lot, and I got to know the brokers and the area, right?
Got it.
But I mean, but now I only buy Cleveland, Akron. It's this very day. I'm thinking about doing other markets, but right now it's still Cleveland, Akron for me.
Got it. Awesome. And then I guess too, like my main thing too, like there's a lot of syndicators out there now too, right? Compared to 5 years ago, holy shit, everybody and their mom is a syndicator now. It's crazy. But and I talk a lot of smack on a lot of syndicators who are working full time and they're trying to syndicate deals. They live in California, they're working full time and they're
Yeah,
syndicating 100-unit apartment buildings in Texas with the full time job. And I'm like, how is anybody not like how is anybody investing in your deal? Because they're going to put more time in it than you because they don't even have a full time job like you do. Um, but so when you were first starting, I guess like since you were in the market, building that team, you can go meet property management, meet the contractors, drive the areas. You were kind of the boots on the ground and you had now the knowledge of the market in the area. Now, my question is for that, because I've thought about that too. I'm here in LA. And so I've thought, okay, maybe I'll move to Cleveland or move to Memphis to be able to handle my projects there and then scale up that kind of thing. My worry has always been if I did go to that market, then it would be much harder and much more difficult for me to raise the capital or to find the signer on the loan because you need somebody with some net worth in order to sign on the loan, the net worth requirement. And then also just raising all the money. So what was your strategy for that? And that's one of the things that's kind of prevented me from going into from actually physically moving there. Is
yeah,
like here in LA, I can meet anybody for coffee and they have 50 or 100 grand that they want to dump into something. So what was your strategy in order to raise money for once you were going to go into that syndication realm? Like, what was your strategy to raise the capital now that you were going to be in Cleveland, Ohio?
Yeah, well, let me address something first before I answer that question. You're absolutely right. When it comes to running a deal, running a 100-unit deal is actually quite easy.
Uh-huh.
Trying to do like 1,000 units, I mean, I stay busy I stay busy all the time with something happening at some property somewhere,
Yeah.
no matter what. And I'm
Yeah.
fortunate that I built a strong team, and all my properties, even the one that's furthest away, is like an hour away from me.
Yeah. Yeah.
Right? I can still make it out there. So
Yeah.
I am not a big believer in, like, living in California and buying 100 units in South Carolina. That to me is dumb,
Yeah.
stupid, in my opinion. I'm going to be blunt. It's dumb.
Yeah. Yeah.
Why,
Yep.
why is it dumb? Because you have a property manager out there who's got other clients, and he's got, maybe I'm his client, right? And he's managing 2,000 of my units. Is he going to give a shit about your 100 units? No, the answer is no, he's not. He doesn't care about your
Yeah.
100 units. He doesn't care about your 6 units or whatever it is that you have,
Yep.
right? You have to be local to the asset. You have to be, in my opinion.
Yep.
If you want the greatest success, you got to be local. That's just, my opinion, and it's worked for me. But I think that if you talk to any experienced syndicator, they're going to tell you the same thing. It's buying a deal is easy compared to running it for 10 years profitably. That's hard. That's
Yeah.
very, very hard. And I think everybody's focused on buy a deal, buy a deal, buy it. Yeah, you can buy a deal. Sure. Can you run the deal profitably, quarter over quarter over quarter? That's difficult to do if you have to jump on a plane to go check out your 6-unit apartment building in Memphis.
Yeah.
That's a very expensive proposition. Your margin is gone probably the whole year when you consider the flight, the hotel, and the dinners and all that, and your car rental or whatever. On a deal that skinny, it's very hard to make that kind of money, right?
Yep.
But whatever, that's just what I think.
Yeah.
And let's see your question. Oh my God, I already forgot the question.
Raising money.
There we go. So, what it comes down to is really building the network and building the credibility with the network, right? That's what it comes down to, is establishing those connections. But it's funny, I'll get people that try to reach out to me, and they sound like a newbie. They don't know what they're talking about, and you know what it is that give me give me an hour of your time.
Uh-huh.
Why would I do that? And that's, again, not to be rude, but it's kind of like, you need to deliver value. I tell everybody this, all my students this, I tell them the same thing. You need to deliver value. If you're going to go reach out to somebody, you need to give someone a deal, not just some bullshit deal off a LoopNet.
Yeah.
I'm saying a real, honest to goodness deal.
Yeah.
Right? Hand it over to them. You can't close it anyway. Hey, look, I found this great deal. Look, my uncle has this 120 unit apartment building. He's looking to get rid of it. Your name immediately came to mind. What do you think about it? Can we work something out? Run the numbers. Know your numbers. Know why it's a good deal. What's the rehab budget? What's the exit strategy look like? Do all the legwork, and then you bring in. Then you show that to a partner. You're going to go in strong, man.
Yeah.
Because believe me, I get hit up with people all the time. Hey, can you coach me for free? No, sorry. Again, it sounds very rude, but I think for most people that know me, I'm a straight up kind of guy here, and I'll answer the questions that nobody else was willing to answer. And unfortunately, it's just what I said. You got to deliver value if you want to break into this business. Breaking into this business is very, very tough. It's not as easy as the gurus say. The way you overcome that is to come prepared, know your numbers, know what it is you're talking about, like the back of your, and you really have to want it, man. I mean, it's like with anything else in entrepreneurship. I mean, you really got to know your stuff. And if you don't know your stuff, someone else is going to be there to eat your lunch.
Yeah.
And again, I don't know if I'm coming across negative or anything else like that, but it's the God honest truth, man. I mean, that's what it is.
Yeah. You
Yeah.
know, I agree with you. There's a lot of people just not putting in the work. I mean, like I said, like there used to be all these networking events here in LA, and I would go to like literally one. You can go to one every night if you wanted to. There's so many networking events pre-COVID, and yeah, you would go to these things, and you know, everybody, you can tell who the newbie was because they said that they were a syndicator, pretty much. Because it was like, okay, what's the thing I can do with the least amount of work where I'm going to go raise money, whatever, another big syndicator, and I'm going to go raise money for that person for their deal, and now I'm calling myself a syndicator. And it's
Yeah.
like, no, you're just a sheep that's running around sending emails with the package that somebody else made. So I don't know. And then because they wouldn't even know how to explain the package or anything like that. It's like, or the exit strategy or any of the questions that somebody had to answer. You had to like schedule a phone call with somebody else to get an answer for something. So yeah, there's a lot of people that I think are running around like that. But I mean, for your first couple deals, then how did you do it? Was it like, did you go to small, what are they called, small offices, like the family offices, to raise money for those first couple deals you did? Was it just through networking, and you actually raised money from people in Cleveland, Ohio? Or was it kind of just because I'm assuming then you had like a network of people too from all your businesses and all the jobs you've had your whole life? So how did you raise money for those first couple of projects that you did end up doing?
Well, the first ones I used my own money,
Oh
right?
wow.
Yeah. So from all the stuff I sold off, right?
Yeah, yeah,
So
yeah.
I had a bit of a nest
Oh,
egg,
that's right. That's right.
right?
That's right.
So I had a bit of a nest egg, but the way I figured is if if I can get my own multifamily deal, then I am an honest to goodness real estate investor.
Yeah.
Because I just like you said, I don't want to be one of those guys, right? That
Yeah.
just talks a big talk. I'm willing to put up a whole bunch of money, my
Yeah.
own money, on a deal and show that I'm serious about this, right? And not everybody has that kind of money lying around. I sold everything to get that asset.
Yeah.
And I mean, I got a really, really good deal on it. It was before the real boom really took hold here. So I got a sweet deal on it. We're in the contract right now to sell that thing. Currently, should produce a nice chunk of change. But you know what it came down to is networking, just networking with people and presenting value. And there's actually a deal that I found a deal that my my property manager was managing, and I ran it's the same thing I told you before, man. I ran
Yeah.
the numbers. I knew what the returns were going to be. I knew what the exit strategy was. I had all that lined up. I made two phone calls to raise the money. The first one didn't go anywhere. The second one was one that took hold. Two phone calls. That's it.
Wow.
Right.
Wow.
I gave her a call. I said, "Hey, listen, here's the deal. Here's what I got. Here's how I got it. Here's the returns. Here's the
Yeah.
exit strategy. Here's how it's going to go." She goes, "Sounds great. 50-50? Yep, let's roll. 50-50 is fine with me. Done." I mean, the phone call was all of 15 minutes, right?
Wow.
We raised the money for that deal. I think that one it was a small deal. It was only like 1.5 million. Um, that was, I think the raise was, I don't know, $500,000, something like
Yeah.
that, a little
Yeah.
less than that. And it took 22 hours to raise all the money.
Yeah.
She was out in Seattle. That's why, there's plenty of
Yeah.
money in Seattle, right? But it's like, that's what I'm saying, man. I mean, but the point is that I was doing the work of the networking. I was
Yeah.
getting in front of people, and she already saw me as someone that knew their stuff right
Yeah.
from the beginning.
Yep.
Right from the beginning, I knew what I was talking about. I knew the area. I knew the market. I sounded confident in what I was saying. I think that's the big thing that many people just don't do. And it's like I said, my life depended on it. That's in
Yeah.
my mind, my life depended on it. Even though I was consulting, I was doing some IT consulting thing at the time. In my mind, I said, listen, this is a short term thing. After this day, I'm no longer here anymore. So you better get this thing running, right?
Yeah.
And it's kind of like, when you know that time is near, you're going to work your ass off, man.
Yeah.
And that's
Yeah.
exactly what I did. That's exactly what I did. And
Love it.
yeah, I mean, I'll tell you, and since then, man, we've done so many deals. I've done deals with many other partners as well. These days, it's just my one partner and I that we've been doing a lot of deals with. He's out of Texas, but it's kind of like I you know, there not every day is sunshine and rainbows and lollipops, but I'll take I will take the worst day in real estate over the best day in corporate America, man.
Yeah.
Bar
For
none.
real. For
Bar
real.
none, man.
Wow.
Yeah.
So what would you recommend to kind of like what we spoke about in the green room, like you said? Like what would you recommend for somebody who's today, like they graduated college, they're a couple years in, they're interested in real estate investing, they have 20, 50,000 bucks. Like what the hell is somebody to do? My pitch is always just get in the game, whatever like I don't care if it's wholesaling or buying a turnkey rental or like just get in the game and then start through that. You'll be able to network and kind of learn about more what you want to do.
Yeah.
But what would you recommend? Because you went a little bit different of a path than most with just buying the residential properties and then going cold turkey and going into apartments. So what would you recommend for people that were in your shoes and now want to do that same kind of thing? What do you think is the best way to go about it?
I would say first you have to focus. All right, and it sounds, and this term is so overused, man. Even as I say it out loud, it sounds shitty, you know. But here's the thing, man. It's like I'll meet these young folks out there, and it's kind of like they don't have the focus, right? They're trying to do a million things.
Yeah.
Like this one young gentleman I met at a party. He was telling me he wanted to get into real estate. He's saying how he's talking to people about family office stuff. He's talking to this other guy about this other thing. I don't even know what it is. Some other wholesaler guy, and is talking to this other guy about some other strategy. And I'm like, dude, one thing, just do one thing. Is this because in this business there's tons of rabbit holes. Just pick
That's for
one.
sure.
You know, pick one. You know, these days, single family. I was never a big fan of single family. However, this is a little more. The strategy I'm going to lay out right now is a little more complicated. Like the guys like Blackstone or BlackRock, they're buying like 1,000 single families
Yep.
at a time. You
Yep.
know, even 1,000 is small for them, and they're buying these large packages to build up a package of single families in markets where multifamily is tight. Because I think across the nation right now, multifamily is tight.
Really tight.
Yeah, really tight. So I mean, that's one strategy. But again, if that's going to be your game, you better learn everything you can about the areas, the demographics, the income levels, who lives there, why do they live there, what's the job situation, all of it. You have to know like the back of your hand. A lot of these guys don't bother doing that kind of stuff. And they
Yeah.
need to if you're going to be a pro at this, right? But if someone's got like say 50, 60, $70,000, they should be investing in themselves. And that doesn't really require a lot of money. A lot of this information is not freely available, but
Yep.
you can either go to library and borrow the books or book programs. I mean,
Yeah.
you can do that. Number one. Number two, get a coach, and not some bullshit coach either. Like there's plenty of those weekend boot camps that are just bullshit, really,
Yeah.
honestly. But I'm not going to badmouth anybody. But I mean, I do a coaching thing. It's one-on-one. It's clear cut. I set up people with introductions with brokers. I mean, I really connect them into the network, right? I
Love it.
get them and I push them into like building the website, getting the cars. I mean, actually building a personal brand, all that stuff, right? Invest in that. And number three, actually maybe LP in a deal, right?
Yeah.
As a limited partner. Here's the thing. So recently, we invited the limited partners in the Rockefeller deal, right?
Yeah.
We invited them out to come out and check out the building. So they all flew. I think it's probably a third of them flew out to here in Cleveland, and we put together a nice dinner for them. And we all got to know each other, got to talk, you know, that kind of thing. And they all got to talk to each other, right? And then
Good
we spent
point.
a couple of days together, right? And that's a great way to really interact and network with other investors as well, right? Because many of these people that invest in LPs, sometimes all they want is that passive check. Others, they want to maybe GP one day, you know, and one way to do it is to LP on a deal. You know, that's one way to do it.
Yeah.
You know, so those are three great ways to really get in and really get the experience that you need. But
Yeah.
man, I tell you, it's the commitment level. That's what it is. It's the commitment level.
Yeah. No, I 100% agree. I mean, you'll go to a networking event. Let's say you went to the same networking event for 6 months straight, and it's a once a month event. You can meet with some people who on month one they have one strategy, month two they have another strategy, month three they have another. It's like this guy's tried 6 things in 6 months. It's like he or she's never gonna get anywhere because they're so scatterbrained. And I think it's because there's so much information out there, right? So like now people are, who wanted to do residential, now they're sitting and listening to you talk, and they're like, man, that's a good idea. Let me buy a portfolio of 1,000. How can I do that? And then they'll go down that rabbit hole. Like you said, just so many rabbit holes, and people are trying so many different strategies when they should just really focus on the strategy that's going to be for me, like the path of least resistance, really, to get out of that job, to start making money in real estate, to do all those kinds of things so that you can eventually make the jump and you have like some experience under your belt, some cash flow coming in from the real estate side of things,
Yeah. Well, I think part of it though too is that I think, again, many of these guys out there, they're promising, if you take my boot camp, by next week you'll be living in Miami and you'll be drinking booze on the beach. No, the answer is no, you won't. You will not be doing that in a week or 2 weeks or a month or even a year for that matter in some cases, right?
Yeah.
You might get some cash flow. It's going to take a little time to build this. I mean, unless you're willing to put in like a lot of work. I mean, I put in a ton of work into this business. I mean, from the time I wake up in the morning, usually I'm up at 5 a.m. to the time I go to bed, almost midnight. I'm at first at the gym, eating, or I'm working. One of those three things.
Yeah.
That's it, you know. And either we're producing materials, in which we're going to be doubling down on that too, like content and such. But it's either that, or I'm working on deals, or I'm talking to my team, or I'm working on something related to the business.
Yeah.
I don't watch Game of Thrones. I don't take pictures of my food and put it on Facebook or Instagram. I don't do any of that shit. Right. That's the level of commitment that's required. Because here's the thing for everyone. You got to understand, number one, every day is a gift. Every single day is a gift. And until you realize that everyone's getting older and we're all going to die. So you better get to work. You better start hustling now. Don't wait. Right. And it requires a high degree of focus and commitment to do this. This is not a game. It's not easy work either. This is not an easy, it's simple. It's not. It takes years. I will tell you, if you commit yourself to doing this, yes, you will get rich doing this business if you do it right. Not everyone is good at it, and that's the thing too. It's like you have to also decide what you're good at. I think I'm geared for doing these larger deals because it requires a high degree of fortitude and a no nonsense approach to get those deals done. Other people they just can't handle that kind of stuff, right? And that's okay. I'm not saying anything bad about them. It's just like, listen, I may be good at basketball, but I mean, I can't go play in the NBA. I'm just not that guy.
Yeah.
It's like, what are you geared for, right? And you have to really sit down and really decide is like, maybe multifamily isn't for you. Maybe it's not for you. But maybe single family is. Maybe that's your game. Maybe you're buying like one house and 2 other houses and 4 other houses. Maybe you're packaging up to 100 and then you're selling it off and you do it again. Maybe that's your game. I don't know.
Yeah.
But you really have to decide what you're going to be good at and then focus on it. That's ultimately what it is. Yeah.
Yeah. It takes a lot of damn time. That's for sure. I tell people all the time, like, it took me 2 years of studying like you were to buy my first house. And yeah, if I was going to do it all over again, I might have, shaved 6 months off of it if I was more focused. But the thing is, when you're starting too, you kind of have to try a bunch of shit, because sometimes in your market, this strategy that you read about or whatever doesn't work because you don't have 10 million. But like, oh, you want to be a multifamily investor in LA? Well, where's your checkbook for $5 million? Because there's no other way to get into this unless you have that network already built. But yeah.
I would tell you to move, man. If you're in LA and you want to get into this business, just just move. Just move. I mean, there's plenty of other real estate guys that are leaving California now. I mean, everyone's leaving California for that matter. Yeah. As long as you don't bring your politics with you, just keep the politics there. There's a reason why people are leaving. I don't want to turn this into political discussion, but if you're listening to this, chances are You understand what's going on.
I know. It's crazy. So Cleveland, Ohio, let's talk about that because both of us invest there. What do you think is what do you think about Cleveland, Ohio now? What do you think is happening and where do you think it's going? Like give me a vision of Cleveland, Ohio 5 years and down the line of what you
Cleveland's terrible. Stay away from this place. Everyone should stay away. There's nothing to see here. Go to California.
Go back.
Go to New York. New York. I hear everything's on sale in New York. Just go there. Here in Cleveland, there, it's funny because I'll look outside from time to time, and it's like it's an old Rust Belt city, right? And there's, regardless of that, there's still a big resurgence coming back here, unlike like a Detroit, Michigan. Detroit is terrible, right? If anybody's listened to this, and it's like I used to live in Windsor, and I would drive back and forth to go to school in Detroit, and Detroit's been talking about a resurgence for God knows how long, and they have not come back from anything, and I don't think they will in our lifetime. Whoever's listening to this, it's not going to come back. They're just not set up that way. The culture doesn't allow that to happen. Here, it is, right? I think that with a mix of some opportunity zone money that's coming in here from a lot of other places where they can't build, like in the case of Rockefeller, for instance, that's a lot of opportunity zone money or opportunity zone tax credit stuff that we're using to get that deal done, those kinds of things are really driving a lot of commerce here. And that in itself, obviously, is also bringing in more people to do the work. And when that starts happening, there's more activity. And when they put a big magnifying glass on it, everybody's wondering, hey, what's going on in Cleveland and Akron? What's going on in these places? Yeah, it's still somewhat landlord friendly, and it makes for a really good mix, and then you mix in there that Sherwin-Williams is here. A lot of the Fortune 500 companies are headquartered here as well.
Yeah.
You have Cleveland Clinic, you have Metro Health, you have some of these other big players out here. It makes for a good scenario to buy, So yeah, I mean that's what's going on out here, So it doesn't have the same infrastructure as like say California, and the weather here isn't nearly as nice as it is out there, but because it has lower taxes and lower cost of living, people would rather be out here than be in Los Angeles, because of that. So
yeah, 100%. Yeah, there was. For all of those reasons, that's why I chose Cleveland as one of my markets too. So it's like 10 S&P 500 companies, Cleveland Clinic. And then there's also a lot of big projects happening like the Euclid Trail project. What's that other one that's close to they're connecting kind of the Cleveland Clinic to downtown. Some like big freeway project that they're building as well.
Yeah, I know about that one.
Yeah, that one too. There's a lot of big, I forget what they call it, like a health tech corridor and all this kind of stuff. So,
that's right.
Yeah. So tons of stuff going on in Cleveland. That's why both of us are investing there. So
it's a great market. Great market.
With that being said, thank you so much for coming on the show. What is the best way for people to get in touch with you if they wanted to reach out further?
I'd say Bulletproof Cash Flow is probably the best way to do it. So if you go to www.bulletproofcashflow.com, we're on Instagram, Facebook, YouTube. We've got a YouTube channel out there as well. So yeah, check it out.
Awesome. Cool. Thank you so much for coming on the show. And it was great chatting with you for the last hour.
You bet, man. Yeah, awesome. Thanks for having me on.
Thank you.